Hello, welcome to the show. Today on the final bar, we're going to be fishing for alpha using the StockCharts scanning engine, looking for stocks that are a little oversold, which is kind of timely with a lot of stocks in pullback mode. We'll see what surfaces in those screens, how you should think about that, how it should fit into your process. Also, I'll share with you one of my chart lists that is part of my morning coffee routine, how I use it, why it should be part of your process. We'll debrief on all the movement, all the action in the markets today. Ladies and gentlemen, this is the final bar. Hey everyone, welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks for joining me every weekday after the close to debrief on the technical activity of the day, look at the charts, digest them, but then put them in the proper context. Think about the longer term trends, how today's action fits into the big picture. So as usual, the 30 to 60 minutes preceding the show usually tends to be pretty exciting, which is a lot of fun as we prepare for this 30 minutes together. Today, no different, right? We have this incredible rally going into the close. It's a heavy earnings week, and so what you're getting is a lot of stocks gapping up, gapping down in reaction to earnings. Stocks like Tesla with huge gaps up, which certainly change the characteristic of a chart very quickly. I'm often asked during earnings season, does it make sense to look at charts, because isn't it just about the news flow and about the earnings, and don't you just need to pay attention to that? I would argue now is the best time to be looking at the charts, because what it does is it helps you understand how people are interpreting the earnings. When you buy a stock, you don't just buy the earnings, you buy the price, right? You buy people's interpretations, people's expectations for earnings. And that's why we're going to pay special attention to charts during a heavy earnings week. So we have Amazon coming up, ExxonMobil, all sorts of companies going. Make sure you have a good sense of where things are reporting, and make sure you look at the charts to see how a reaction can be put into proper context. Coming up on this show and also on StockCharts TV, we have some really cool stuff. Next week, the final bar is going on the road. We're actually going to be in Atlanta and then Orlando. So we're going to have some really good discussions with some market strategists, market experts in Atlanta, which we'll look forward to sharing with you. We're going to be at the Money Show in Orlando. So if you've not checked that out, go to the website, and if you can join us down there, that'd be great. It would be a pleasure to see you. I hope you'll introduce yourself after my presentation. On February 10th, we are premiering our new interview-style show called Behind the Charts. So I've been able to sit down with so many fantastic experts, market experts, strategists. We're going to bring those conversations to life for you, give you a stream of new insights, new content to think about. And then on February 13th, if you want to jot this down, we'll be doing our first live Q&A on YouTube. So we'll actually share a couple brief charts and then have a discussion about what you're seeing and how I can illuminate the charts for you as much as possible. So a lot of really cool things coming. We've got some great plans for StockCharts TV, and we're really, really happy that you're going to be a part of it, everyone. For now, though, let's get to the market recap. So when I'm thinking market recap, the first thing I'm looking at is the member dashboard, just to see what's been happening. And toward the end of my daily process, this is where I like to focus, because it's all about what's happening now, and then I can start to connect it to the long term, which is really what we're trying to do here. So the S&P 500 with a nice move after lunch, essentially, just rallying to strength, closing above yesterday's close, well above the open, up 0.3%, so just under 1/3% higher. The NASDAQ up just a little bit less, but overall pretty strong across the board there. You have mid caps and small caps lagging a little bit behind. So even though they did well going into the close, they didn't do anywhere near as well as the S&P 500. So we have this similar challenge that we've seen before, which is a market that appears healthy. You see accumulation going into the end of the day, but it's not led by the more speculative stuff, the small and mid caps. It's really dominated by the largest companies out there. Now, is that a problem? Not really, because as you've seen in the last year, the market can do just fine with the mega caps leading, and that's sort of what we've seen. However, again, if you look at historically at long bear markets, there's a point when the speculative stuff like small and mid caps tends to do better, and we just haven't seen that. Today seems to be no different, right? You see the strength coming from the top of the market cap tiers. Let's look at a chart of the S&P 500 just to see how things played out. So as we talked yesterday, that 3230 level, that's the low from Monday's session, which I think is going to be a really key one. When we sold off into the open today, sort of traded lower, this is the level I was paying attention to just to see how we would get relative to that point. We never touched it. We remained above it and obviously cleared much higher into the close. So 3230, sort of that first level, and then below that, I think the real key level is 3210, which is the low from the end of last year. Also lines up with the 50-day moving average. And again, in a healthy uptrend, you'll have pullbacks to about the 50-day. That's totally reasonable. But if you start breaking below there, then you have to sort of question whether this is something deeper, more sustained, or if it's still a short-term pullback. So overall, still in very good shape. Looking at the sectors, you had the strongest moves in financials, in consumer staples, and utilities. This was a little weird because obviously you rallied a lot into the close, a lot of movement, but this is where things sort of netted out. Interesting to see a lot of strength in the financial sector today. We're going to look in one of our screens, which is looking at oversold stocks. Actually, some financial stocks pepper in there pretty easily. We then have staples, and so that staples to discretionary ratio continuing to rotate lower, suggesting more of a rotation to defense versus offense within the consumer space. Technology actually in great shape today and outperforming the market. So that has been one of the main things we've looked at is the strength in the XOK, how that relates to everything else. Down at the bottom, we have materials, healthcare, communication services down at the bottom. And remember, with comm services, you also have, you have sort of the, Facebook types of names. Facebook down big, which is what's going to drag down communication services. This is our biggest loser in our proprietary scooter rankings today. We'll look at that in a moment. But you also have the traditional telecoms, things like AT&T and others that don't tend to do as well on offense as others. This is what happened with Facebook, and again, in an earnings week, you're going to have gaps, and that's sort of what you have to be familiar with. So gaps are going to happen. The question to me always is, where is the gap? Fine, it's right here. We look to the left and see where are we at. Have we eclipsed any previous significant lows? Where are we at relative to the 50-day? Is the RSI remaining above 40? Those are all questions that help you evaluate how bad of a move this was or how destructive of a move this was. Stock closed down over 6%. It was down a lot more earlier in the day, but closed back above the 50-day moving average. So I think right now with something like Facebook, it's all about whether that sort of level holds, whether the RSI remains above 40, that's sort of that traditional bullish mode. If not, then it feels a little bit more like July, August, September of last year, where all of a sudden you saw the RSI getting lower, more in a bearish range, and it told you that the correction was going to be deeper in terms of time and or price. On the upside, names that did very well. You actually have some interesting charts in here like Schwab, Raymond James popped up here. So the quick quiz to all of you. What candle pattern am I illustrating right here? This is something we're seeing on a number of different charts as we speak, especially in financial, some of the names in the same group. What is this pattern? Bullish engulfing pattern, right? We have a down bar and then an up bar, and the second day's body engulfs the real body from day number one. So in general, short term, that's actually a pretty constructive pattern, telling you in the short term there's more accumulation in the distribution. And the low of that pattern around 45, 25, 45, 50 is sort of the bottom. As long as we remain above there, that bullish engulfing pattern is in force, suggesting some short-term upside in stocks like Schwab, Regions Financial. I did want to point out automobiles up the most today. You had Tesla with a nice uptrend as well, and that's driving that automobile industry group up very nicely, up 5% today. But the rest, the next couple, actually in consumer staples. So remember, even in a day like this, when you have a nice big recovery, you're thinking, okay, this is foot on the accelerator. Don't assume that means certain sectors. Look at the charts of the sectors, see what's actually working. Here you're finding in consumer staples, which you may not normally go to. There are charts that are actually looking fairly constructive here. So that is our market recap for the day. A lot of interesting movements. And again, in earnings week, I really like to pay attention to the scooter movers, and you'll see the stocks that are moving up and down in those rankings. And at this time of the quarter, it usually is related to some sort of earnings and or news flow that comes out. Our next segment is called Fishing for Alpha. And Fishing for Alpha is the way we bring to light the scanning engine on StockCharts.com. I'm going to remain on the member dashboard for this. Click on Scans, and you're going to go down to this section right here. Now, our lists are going to look very different. Obviously, the more you use this function, the more you're going to fill in some of the scans that you use. If you're not super familiar with the scanning engine, we keep it surface level on this in this show just due to time, and I want to get through some of the main takeaways from it. But if you go to our YouTube channel, go for Chip Anderson's shows called Deep Dive. He's done a couple deep dive segments on the scanning engine where it really digs into the details, shows some of the ways to construct and manage your scans. I'd encourage you to look up some of his videos because they're very, very well done. And I'm not just saying that because he's my boss, but also because he did a good job with them. Now on my scan, what I'm going to do is focus on this scan called RSI Oversold SPX, and I'll show you what the scan is. It's a very simple scan. I'm basically just looking at S&P 500 members with an RSI below 30. I think a lot of times with the scanning engine, we can try to overcomplicate things like you need a lot of really specific criteria. And I would tell you, having used scans for about 20 years as an analyst, as a market participant, the more specific you make the scans, the more refined and the less robust they are. And what I mean is you will come down with such a small list that very few stocks will actually fit your criteria. I like to keep my scans a little broader and then look at the charts themselves and draw further conclusions from that. So anything that would come out of this list, and I'm going to run the scan here, doesn't mean that I would automatically put it on like a mental buy list or assume that that means something in particular. All this does is the scan puts it on my radar. Then I'm going to go through the charts and see what happens. So what this is telling you is as of right now, 39 S&P stocks out of 500 are oversold with an RSI below 30. A couple things you can do with this information. Number one, I like to sort it by sector to see which sectors bubble up to the list. So we're ordering it alphabetically. I can see which sectors have the most names. Here I'm seeing a lot of consumer discretionary names. I am not surprised to see a number of energy names in here as well, some healthcare, and then it's kind of spread around through some random things. But I find it very interesting, a group like technology, which has been so fantastic for so long, you actually have charts that are popping in here that are oversold. The other thing you can do is sort it on scooter rankings. So sort it in the order of scooter rankings. That would mean which are the highest rated stocks based on this ranking system. And so that means something that historically has been pretty strong and now is actually rolling over and becoming oversold. So what I'm going to do now is store these in a new chart list, preserve my sort order, and we're going to look at the chart. So there are a couple ways to do this. I do it 10 per page, which is just an easy way to get to some of the visuals. So here we see something like AbbVie. AbbVie's in the biotech space. Biotech as a group has been a very interesting play because it's broken out, it's broken down. It's been really interesting how that relates to the broader market conditions, but here AbbVie is actually oversold. So I see a stock that has broken down through the 50 days. It's now below a downward sloping 50-day moving average. It's broken below its most recent swing low here from back in November, around 84. Now the RSI has come down and it's oversold. And look at the performance and how it's rolled lower. So this is a name that's been underperforming, had been pretty strong, but it's rotated down in a very big way. Next is O'Reilly. This is a consumer name. This is a auto retailer stock. Similar kind of configuration. So something that's broken down below a downward sloping 50-day oversold. We're going to go down a little bit here. BB&T. So here we're getting an interesting one, right? BB&T is in the financial space. It's one of the banks, and we've had a couple banks that I think popped up on the list here. What's interesting here is you had a big gap down today, a big sell-off, but by the close, back above the 200-day moving average. So it's really interesting to see when stocks are oversold near a really significant support level, right, in this case. So here we actually lined up with the support level from October. It actually traded below the 200-day moving average, but closed back above it. So overall, that suggests a little bit of accumulation going into the close. So the fact that it's oversold still means it's relatively depressed. But overall, if I'm thinking more as a bottom fisher looking to buy beaten down stocks that might be at attractive levels, something like this, it's actually showing signs of strength around a key support level, may be interesting to nibble on a little bit. I'm not so sure. Let's keep going down here. So this is maybe the opposite, something like UPS. Compare this to the chart we just looked at with BB&T, right? Here we have a stock that's breaking down through support, breaking down through its most recent swing low, and closing below the 200-day, not just trading below it. So this is a lot less constructive than chart number one that we just looked at. So these are the types of charts that will pop up. How would I suggest using a list like this, a screen like this? Three ways. Number one, and I would say three questions you want to ask yourself. Number one, do I own any of these stocks? If so, you better be able to justify why you still own them being oversold, right? If you own this stock in a portfolio, can you still justify it by the fact that it's oversold, it's been beaten down, it's come down so much that it's one of the weaker names out there and it's underperforming significantly over the last couple weeks? There could be reasons why you still want to own it, but I would want to revisit that and make sure the thesis still works. So question number one, do you own it? Question number 2, what are the sector group themes around here? And we looked at that earlier. We saw a lot of consumer discretionary. We saw a lot of energy. That makes sense. Are there any interesting themes that might come out of that list of stocks that might be interesting to relate back to? And then number 3, are there any potential buy candidates? Are there any stocks, maybe like BB&T that has traded lower but shown some signs of accumulation? And as long as I have a good stop in place, maybe it might be interesting to take a nibble and see if there's an opportunity there for a short-term recovery rally, buying on weakness. So those are the 3 questions you would want to ask. And I think in order, number 1, look at the results. What are the group sector themes that you see in there? Do you see a concentration of biotech or technology or energy? And what does that mean? Are you comfortable with that? Number 2, do you own any of these? And if so, are you still comfortable with it? Are there any risk levels, any levels at which you want to completely cut your losses and get out? And question number 3, are there any buying opportunities, any bottom fishing candidates? And anytime I think about a bottom fishing candidate, I think of something that's been beaten down, something that's really come to the lows, but it's potentially at a support level near a level at which buyers have come in before, maybe something like Booking Holdings nearing this 1825 level. Is there an opportunity to take a speculative position with a good stop below the previous low? So that is fishing for alpha this week. I wanted to look at the scanning engine to focus on oversold stocks. This is not a one-time thing. I think this is a great regular routine thing, maybe once a week, just to see what stocks are being oversold relative to week to week, see what sort of new names surface there. We're going to take a quick commercial break. We'll be back with a Talking Technically segment using the RRG methodology. We'll see you in a minute. Hey everyone, welcome back to the show. Really appreciate all of your questions and all of your feedback on how we're doing with the final bar. Please get your questions to us. We're going to do a mailbag segment tomorrow. So the final bar at StockCharts.com is where you can send any questions on the markets, on technical analysis, on specific tickers, on charts, whatever you want, and we'd be happy to address it on the show tomorrow. So get your questions to us anytime. Also on the Q&A during the show here, just pop them in there. We'll make sure we take a look at it. What I want to do next is introduce my colleague, Julius DeKempener, who's the founder of RRG Research and really the creator of the RRG Relative Rotation Graph methodology. I've known Julius for years and years and used to get his work when I was on the buy side as an institutional investor. Used to get his research when he was at a broker and loved how he was able to visualize sector rotation in a way that we had not seen ever before. And now it's so cool that you and other StockCharts users have the ability to analyze things the way that we were doing it a number of years ago, and it's a much better version now than we ever had at that point. So here's Julius DeKempener talking about sectors using the RRG methodology.
Relative rotation graphs can be used very, very well to drill down from higher levels on the asset allocation pyramid than to individual stocks. So let's say that you want to start off with looking at the rotation of various sectors around the S&P 500. You simply go to the RRG page, go to the groups selection and look for S&P 500 sector ETFs. If we select that RRG, you will see the S&P 500 sectors rotating around the S&P 500. That'll give you a handle or a tool to find out which sectors you like and which sectors you don't like. Now, if we look at this RRG, XLV is in the leading quadrant, which could be an interesting sector to look at, or if you're a little bit more adventurous, you might want to look at the industrial sector, which has just moved into the improving quadrant and is heading towards leading. If we want to look at the members of the healthcare sector, we simply go again to the group's selection box and we look for XLV members, in this case healthcare, here in the middle. If I select it, automatically all the individual stocks that make up the healthcare sector index are loaded up on the RRG, and immediately XLV will be selected as the benchmark. This will give us the opportunity to work our way through the various members of the healthcare sector and figure out which stocks in that sector that we like. Now, switching to industrials, which was the other sector that we thought we would like to see as it's an interesting move, is as simple as going back to the selection box and select XLE members to load up the various members of the industrials index against the XLI as the benchmark. So here we have a tool where we can very quickly move from a higher sector level perspective down to individual stocks, where we're looking for the good sectors, and in that sector we're going to look for the right stocks.
Sector Spotlight is a must-watch because he does such a great job of showing how to think about sector rotation. So check it out on our YouTube channel if you've not seen it yet. We are going to move on to our next segment called Today's Chart List. One of the things we talked about in using StockCharts, one of my favorite parts about the platform is the chart list system, which is the way that you actually have a group of charts, a group of stocks, a group of tickers that are important to you, and you can use it for a lot of different really cool ways. So if you go to your member dashboard and click on the chart list button, you're going to see a listing of all the different chart lists that you've created. Also, chart packs that you've enabled are going to appear on this list as well. What I'm going to do is show you one of them, and we love to occasionally do this segment just to show you some of the options of ways you can use the chart list platform. I'm going to show you one of my lists, which is the main way that I look at U.S. sector ETFs. So sort of in line with what Julius was talking about, here's how I take what I learned from the RRG methodology and then sort of add my own spin to it, add it as part of my process. So this is the couple ways that I use this chart list. Number one is with the candle glance view. So when you bring up the chart list, you can view it certain ways. I view it as a candle glance view. You know from the show, hopefully, I use this view a lot because it's a great way to look at a pile of charts, kind of like throwing all the charts on your table and seeing what things are interesting, which ones you want to pay more attention to, dig deeper into. So what I love to do from this view is just look at all the, sort of high level patterns. Overall, what's doing well? Overall, what's holding up nicely? Overall, what's testing support? What is breaking down? Any sort of themes there. So just at a quick glance, what jumps out off the page of me? Number one, I see a group of sectors doing pretty decently in terms of continuing to plow on to new highs. The XLU is probably what jumps off the page of me. Actually, it looks like new closing highs today on a day that was a little rough until the close and the momentum coming in there. Consumer staples, also this nice sort of stepwise motion, higher highs, higher lows. And then technology, right, which is pulled back a little bit, but overall just in this nice position of strength. So all three of those above an upward sloping 50-day moving average across the board. Then you have a group of sectors that are actually testing support, so at or near their 50-day. Communication services, XLC, is probably an interesting one, just testing at the low, almost hit right on the 50-day today. So it's an interesting sort of pullback option. Consumer discretionary, same thing. XLV, healthcare, same idea. XLI, industrial. So a lot of sectors that have been doing very well are now pulling back and testing a key support level. Whether or not those four sectors remain at the 50-day and hold support, or if they break down, that's when I would start to be concerned. You then have a group of sectors that are breaking down through support, things like materials, financials, below their 50-day, the 50-day starting to turn sideways to down a little bit, and then you have the real ugly outlier, something like energy that's really at long-term lows, really more value candidates at this point. So that's number one, is just seeing how these sectors relate to one another. I like to use what I just did and think back to the RRG and how they relate. I like to combine the two of them together and think about how they're related. The second thing that I would then do is take this and view it as a chart book, which is basically starting from the top, communication services, going right down the line and seeing, in particular, what am I seeing? So here I'm looking at Communication services, I'm looking at the relative performance. I can see it's pulled back to the 50-day, underperformed a little bit, and overall sort of a market performer, sort of sideways the last 3 to 6 months. So going through this, I would start to click in and add some comments, maybe some thinking if it's something that I'm going to use regularly. I keep these ones sort of clean just for the purposes of the show. Finally, the third thing I would do then is look at the correlation view. And this is really cool. You can pick a specific time frame and then see the rolling correlation for that period. So right now I can see over the last 20 days, the S&P, the spiders, obviously a 1-for-1 correlation with the S&P. That makes sense. We see things like communication services, healthcare, consumer staples moving pretty much in line. But then look at what's not really strongly correlated at all. Energy, financials, utilities. So utilities is not inversely correlated to the S&P. It's sort of a 0.5, which is not a strong relationship, right? So a lot of these sectors are actually very diverse in terms of the return profile for the last 20 days relative to the S&P. So those are the 3 ways that I use this specific chart list, looking at the candle glance, looking at the correlations, looking at the chart book. And the last thing I will tell you, and then we need to move on, folks, is to look at the summary. And remember that you can send reports. This actually sends it to your email. So I get this one actually every day at the close to see what's happened with sectors during the trading day. You can also do a weekly one as well. We, however, need to wrap the show by going to the 3 in 3. So at the end of every show, 3 charts in 3 minutes. If these are not on your radar up until now, I certainly hope they are from this moment on. Chart number 1 is the AAII rankings. This is the American Association of Individual Investors. This is looking at retail investor sentiment. This is a chart we've looked at before. Thursday, every Thursday is when they update the numbers for the week. And I thought it was very interesting that there was a huge change in the expectations from last week to this week. Last week we had 45% bulls. We now have 30% bulls. Last week we had 25% bears. We now have 37% bears. So the difference between bullish to bearish went from plus 20 toward the bulls to minus 7 favoring the bears. So for the first time since last October, there are more bears than bulls in this survey. Now, again, a lot of that is in reaction to all the news flow, all the changes very quickly in stocks, but it's interesting to see that it's similar to some of these former pullbacks. It reminds me a lot of last May, where you had this nice run. You had that first week down. That's where there was a huge gap, and then it continued to get worse as expectations got more and more negative, and that's when we started to have a little deeper of a correction than some might have had expected. So interesting that it's lined up with some of these previous corrective patterns. The second one is the relative performance in semiconductors. I often talk about this group as a bellwether group. If this group is outperforming, then the market overall is probably doing okay. It's just testing support. Earlier in the day, this ratio is down about here because semiconductors were down so much. They corrected it back up a little bit, had some buying going into the close. So overall, it's right at support, right at the 50-day. If this ratio breaks lower through the end of this week, I think you need to be a little more concerned about the overall strength in equities. At this point, it's a chart to watch. And then finally, number 3 is emerging markets. So obviously, news from China and everything is really dramatically changing the characteristic of this chart. But I think it's interesting to see that the EEM, the Emerging Markets ETF, has pulled back to what I'd call a polarity level, right? This is where we found resistance over the last couple years. We've now pulled back to that same level. And a lot of times, support levels become resistance and vice versa. So we're right at an RSI around 40. We've pulled back to a pretty significant support level. Is this the point at which emerging markets find stability and rally, or is this the next leg down as we failed at the 50-day moving average? That's why that's number 3 on the charts to watch. And ladies and gentlemen, that is our show for Thursday afternoon here in Washington. Thanks so much for joining us every weekday after the close to look at the charts, think about the short-term movements of the day connected to the long-term. Please send your questions to us. thefinalbar@stockcharts.com is the best way to get a hold of us. Send your questions, your feedback, any specific charts you're looking at. We'd love to talk about it in our mailbag segment tomorrow. We've also just released our 50 Years on Wall Street documentary short with Ralph Akinpour. It was so beautifully done by the StockCharts TV team. Go to our YouTube channel and you'll see that video. It's about 18 minutes long, and it's such a great window into an incredible investment strategist in his 50-plus years analyzing the markets using charts. Thanks so much for joining us today and every day on The Final Bar. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Have a great night.